Hello from a cold, wet and miserable Monday the 5th. I'm back in Blighty for the market brief. And Swati Dhingra has been on. She's a pretty dovish member of the MPC. She only voted for a 50 basis point rate hike at the last meeting. And she believes that rates have only just become restrictive, so further rate hikes increase the risk of a deeper recession. She also believes that despite all the industrial action over wage increases, a wage price spiral has not yet begun. Indeed, the relative fall in real wages seen in last month's data would seem to support this view. On the calendar this week, we have output data due from industrial, manufacturing and the construction sectors. Further decline is expected from each of those sectors as the economy continues towards that expected recession. We also have house price data. That's expected to fall year on year, forecast to fall to 7.9%, which would be down from 8.3%. But despite this rather bleak outlook, sterling is doing okay in the markets at the moment. We start the new week around 123.10 against the dollar, about 116.55 against the euro, and euro dollar is around 105.65 on the open. Over in the US, Non-Farm Friday delivered a surprisingly robust headline figure that posted 263,000 new jobs and surprised many, including myself, who were playing for hashtag Team Under in the sweepstake. The forecast had been for 200,000 new jobs, and Powell's speech had suggested that the Fed may start tapering rate hikes, possibly even at the December meeting. That was all taken to mean that non-farm payrolls would likely follow the weaker job openings data and the drop in the ADP private sector data seen last week. There are even some analysts suggesting the headline figure could be negative. But alas, no. 263,000 new jobs meant another win for hashtag Team Over. And that saw long-time player Paul Price take the top spot for the second time. Congratulations to you, sir. However, we shouldn't write off Powell's comments just like that. The unemployment rate could be bottoming out around 3.7%, and the data does rather paint a picture of a slowing economy. So there is still a case for a smaller rate hike from the Fed. And that lingering uncertainty over the Fed rate expectations helps explain a pretty small reaction from the dollar to Friday's data, and indeed why the dollar ended the week a bit lower. The dollar index finished off around 104.55 on Friday. And that's how I'll finish off today. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.